Welcome back to Equity Mates Investing. It is time for...
Let's ask the community.
Hey, Equity
Hi, I
Mate.
just had a question.
Hey, Bryce, I've got a question.
Question answered.
That's right. If you have a question that you would like to submit, head to equitymates.com/contact. But today's question has come in from Jordan Boyle. And Jordan asks, hey team, I'd be very interested in hearing what your thoughts are on the current low value of the Japanese yen and why the index is trading at all-time highs. Do you think that this presents any investing opportunities for us?
The all-time low of the yen is actually a common theme because we have another question that came in from Nick. With Japan AUD at an all-time low, is this the time to buy some exposure to Japan with double upside in currency and growth?
Perfect.
So it is certainly something that is on people's mind.
Yeah, great. Well, let's jump into it. I think firstly we should address why the yen is low. So primarily two reasons. Firstly, monetary policy. The Bank of Japan has historically kept rates at incredibly low rates, even negative, for a long period of time.
It just went back to positive this year, didn't it?
Yeah, just. So it's been in negative territory. Contrast that to major economies around the world who have been hiking rates for the last 12 to 18 months.
Yeah, and the reason why is when there's a differential in rates, money will move to where the rates are higher so they can get a better rate of return.
Yeah.
There is just like billions or trillions of dollars just constantly seeking the best return.
Yeah. So plenty of money flowing out. Secondly, economic performance. We know that Japan has faced pretty significant structural challenges with its economy over the last 20, 30 years, and that includes aging population and low productivity growth. Of course, slowing economic growth leads to, more money outflow from economy, looking for other opportunities.
Also, just like a massive debt to GDP. Like Japan's government is so far further down, like quantitative easing. Like not in Australia, but in the US, the central banks was buying bonds to like add liquidity to that market and stimulate. In Japan, they bought so many bonds that they couldn't keep buying bonds, so they started buying stock market ETFs. Yeah,
Biggest owner of ETFs in Japan or something. It's crazy.
It's a structurally challenged economy with some great companies, I think is how you explain Japan.
Yeah. It's wild. So that's why the yen is low. Jordan also asked about the index trading at all-time highs. So this is something that's happened in the last sort of 12 months. The Japanese market has ripped back. Couple of reasons for this. Corporate earnings over in Japan have been improving profitability across the board, and we know that then drives investor confidence. So people are starting to get a bit more confident with the performance of the stock market.
Just on the corporate earnings as well, like there's a self-reinforcing feedback cycle. Like a lot of the big Japanese companies are exporters. So like think Toyota, they sell cars all around the world. As the yen gets weaker and they're selling in Australia and earning AUD, in the US and earning USD, in Europe and earning euros, when they report, they convert all that money back to the yen. So like it helps these exporters.
Yeah. Otherwise, there's foreign investment. So when currency is weak, it does provide an opportunity, or it does become attractive for foreign investors to come in and buy up assets and take advantage of the weak currency. So that's been driving stock market growth. And then the government has actually intervened and brought in a number of policies to encourage good shareholder returns. So they're encouraging companies or forcing companies to have a certain level of liquidity with their stocks. They've changed the structure of the stock market and where companies fall if they're like classified as growth companies or long-term companies. So they're really trying to invigorate trading, I guess, and companies to do the right thing to encourage shareholders to get back in the game.
Yeah, it also helps that the Bank of Japan owns $475 billion worth of exchange traded funds. $475 billion US dollars worth of so that's 70 trillion yen.
They'll be super happy with the last 12
So
months.
there's a bit of they're definitely helping the demand side of the supply and demand equation. But look, so that's the story, I guess. The Japanese stock market is doing well. The yen is weak. The question is, as investors around the world, but you and I are sitting here in Australia, like, what should we do about that? Is there anything we should do about that?
Well, I think firstly, you've already mentioned it. It provide, like when you're looking at investment opportunities Firstly, if you're looking at the domestic market and buying stocks that are going to benefit from a weak domestic currency, you've spoken about exporting companies, like companies that derive so much of their revenue from exporting product. They're likely to see more business in a time when revenue is low. So that's the first one. Again, travel and tourism and companies that benefit from that. If I'm seeing Japan is going to be a cheap place to travel to, and the Aussie dollar is going to get me further there than it is if I go to the States, I'm more likely to go travel there, and that has flow-on effects to the companies that are based domestically. And also, again, we spoke about foreign investment, but real estate and sort of real assets as well in that currency tend to do well. So from an investment point of view, if you're looking at investing domestically, that's how you can think about it. Otherwise, if you're looking at just investing in the ETFs, for example, that track total market, but you would want an unhedged version if you're to do that.
Well, I think that's really the question. So, like, if you want to pick individual Japanese stocks, you've mentioned a few sectors that would benefit, but like, if you want to pick individual Japanese stocks, you've got to do the work, and Google Translate's going to have to work in overdrive, or you're going to have to know some Japanese to get in the weeds of these companies. If you just want to buy the overall index, for me, the answer is worrying about currency is an important consideration if you're trying to make money in the short term, but shouldn't worry you if you're thinking long term. And, you know, like, there is certainly money to be made, and there's like a double upside if you get the right company or the right index that's growing, and then you also get the currency free kick as well. And as you said, if you're buying an ETF, it should be unhedged. The longer you extend your time horizon, the less that currency movement matters, and the more the underlying asset or the underlying index matters. And so for me, when I'm thinking about would I invest in Japan, I'm thinking long term, like I'm thinking decades into the future. And for me, I don't want to own the Japanese stock market for decades in the future, because the low yen entry point now and the current good share market performance, I think over time is going to be eroded by just the large structural demographic issues that Japan faces. And so for me, like, I think there's nothing wrong with trying to make a quick buck and like trying to trade if that's your game and that's what you're trying to do. But it's not my game. It's not what I'm trying to do. And I'm pretty happy letting this opportunity go through to the keeper. I think there's better growth opportunities in other parts of the world. Sorry to our Japanese listeners. But you know what I am doing? Alice and I have been keen to go to Japan, and this has certainly been the impetus for me to look at booking a trip to Japan.
Get on it.
Yeah.
Yeah, there you go.
What about you?
Oh, same reason. I'm not really interested in getting exposure outside of, well, the ETFs that I have exposure to don't actually have Japan in them because they're all these Asia ex Japan for the reasons we've spoken about. And I think there's too many structural issues at play that that don't excite me about the opportunities long term. Yeah. So for that reason, I'm out.
If you wanted some Japanese exposure, you could look at like a global 100 ETF that would probably have like the Toyotas and stuff in it.
Yeah. Car manufacturer ETF, there'd be plenty out there.
No, well, I mean, like, what are the other big Japanese companies like Sony and, you know, like, they're the ones that you probably want access to. Buffett bought a whole bunch of the Japanese trading companies. But again, like, you need to know what you're buying.
Thank you for the questions from Jordan and Nick. Keep them coming if you'd like to put one forward for the show. equitymates.com/contact, and we'll make sure we get it in here.